Vistara, Applied Materials' brand new chip making platform, is designed to give chip makers more flexibility, more production capacity, and more room for complex structures on a one tiny chip. With this new technology and also prior 3 years of solid growth, Applied Materials could face some challenges. First of all, the decrease in chip demand, and second, it could get in between the trade war of the US and China. But are these solid concerns about the future of applied materials, or are these just headwinds? Hi guys, and welcome to another video of Take It Finance. First of all, I really want to thank you for watching our videos, liking, commenting, because it really means the world to us. And we also would like to hear from you and to know what do you like and dislike about our videos, what parts of the videos you would like us to improve, and what parts even to take out and not talk about. So it would really help us to understand from you your needs and even ideas. We are really open to ideas. So you can write it to us in the comments, via email, in whatever way you want and feel comfortable talking to us. And anyways, thank you so much, and let's begin with the video. Applied Materials is a semiconductors company that creates and sells advanced equipment, software, and services that are used in making computer chips, displays, and solar cells. As an equipment company, Applied Materials is positioned in the first stage of the semiconductor chain, just like ASML and Lam Research. With around $120 billion market cap, Applied Materials sells its products to some of the biggest names in the semiconductors industry, like Intel, Taiwan Semiconductors, and Samsung. The company operates in 3 reportable segments. The first one is Semiconductor Systems, then Applied Global Services, and the last one, Display and Adjacent Markets. Now, based on the company's latest 10K report, the Semiconductor Systems is the largest and also the most profitable segment, representing 73% of the total sales. But the Display and Adjacent Market segment is not only the smallest segment, but it has been decreasing in the last 3 years. This imbalance between applied segments makes the company more vulnerable and more dependent on the success of its semiconductor system segment. For example, in fiscal year 2023, which is the current year, Applied expected memory customer spending, which is a part of the semiconductor system segment, to be lower compared to fiscal year 2022. It means that even the slightest change in demand in the semiconductor system segment could impact the overall revenue and the overall sales of Applied Materials. Now, I think it's about time to talk about the big elephant in the room, which is Taiwan and China. Taiwan and China combined compose 52% of Applied total revenue. So we've all heard about the complicated situation between the US and China, and things can get worse. But if things will escalate and the US will restrict the export and import from and to China, it will impact 28% of Applied revenue. And if China will decide to do anything about Taiwan, it could impact another 24% of Applied revenue, which is a lot. These are the 52%. And I know, and we all know, that all the semiconductor industry is using materials from China, and such an occasion could impact the whole industry. But it seems like Applied Material is more vulnerable in this regard. And I think that the question that has to be asked is if we can trust the Chinese government in these matters. But don't jump into conclusions just yet, because I think the future isn't so gloomy as it may seem. First of all, TSMC is moving to Arizona, at least part of its operations. And this plant is scheduled to begin operations next year in 2024. Second of all, Intel, which is another big customer of Applied Materials, is working on building new plants, which will bring a lot of revenue back to the US. And another thing is Samsung. Samsung wants to take over Taiwan Semiconductor and become the #1 semiconductor chips manufacturer. So after all of these things and all of the reasons, I don't see any probable reason for Applied Materials to be cut off the line of revenue so abruptly. Just to put things in order, all 3 companies are not Applied Materials competitors, but they are customers. So let's dive into the financials and see, first of all, the top line, which is the revenue. Applied revenue looks great. They are increasing their revenue, it is positive, and we can see just a decrease in 2018. And also the average growth rate is 15.5%. This steady and positive growth is exactly what we expect from the companies we analyze and also the companies we would like to invest in. This is an important box that we really like to check. But if we take a look at the margins in total, we can see that there is an upward trend. I mean, the gross margin is increasing, but what's more interesting is the operating and net income. As you can see, in 2014, the net income was 11% and the operating was 16%. And right now, it's about 25 and 30% respectively. And you can see it very clearly if we look at the selling general and administrative ratio to revenue. I mean, in 2014, it was about 10% and now it's 6%. So it is very impressive to see how the company is being more effective and is really working on cutting expenses. It's pretty obvious that Applied Materials is into giving back money to their shareholders, because in March they announced they're increasing their buyback program. Now, let me say a few things about buyback programs. On the one hand, it's very good, because when the company is buying back their shares, it means that the company believes in its business and it wants to reduce the amount of shares so the EPS will be higher. So that's great. But on the other hand, when the company is buying back share and not considering the price of the share, this is when things are problematic, because in my opinion, buying back shares when it's overvalued, it's not wise. And I, as an investor, wouldn't like a company that will buy back shares when it's high, only when it's undervalued or fair valued. Because in this way, they're only wasting money on buying back shares, and I would rather prefer the company will invest more in its business than wasting money on buying back shares. Now, if we go back to Applied Materials, we can see that their shares outstanding decreased dramatically from 1.2 billion shares outstanding in 2013 to 845 million shares at the current time. That's an almost 30% share reduction, so they have a wonderful job maintaining the growth of the EPS. Generally, Applied Materials tend to buy back shares when the stock is relatively cheap, like in COVID-19. But there are some instances they don't buy them at the right time, in my opinion. For example, in 2021, when the stock was relatively expensive. But buybacks are not the only way that Applied Material is rewarding its shareholders, because they also distribute dividends. Now, it is true that they have been distributing dividends for the last 17 years, which is impressive. And in the last 5 years, they have been increasing their dividend after keeping them flat for 3 years. But it's not enough, because the dividend yield is almost 1%. So in my opinion, if you're looking for a dividend stock, Applied Materials is not the right direction. In my opinion, they have such a strong free cash flow that they should utilize this to reinvest it back into the business, because their business is still growing and it needs a lot of funds. And I think the industry as a whole is relevant, and it will be even more relevant in the future with all the AI, 5G, and Internet of Things. But hold on, we will talk about it in a few minutes. Now let's take a look at another important metric, which is the ROIC, the return on invested capital. It measures how the company utilizes and allocates its capital in order to generate profits. Overall, we can see that there is a growth, but at the same time, it expresses quite nicely the cyclicality of the semiconductor industry. And Applied Materials looks quite like its competitors, Lam Research and KLA Corporation. We can see that the company is rebounding from the downside that it has experienced in 2019 until mid-2021. Now, their debt-to-capital ratio isn't too high, which means they are not too leveraged or are not in a risky position to fail paying its debt or something. Here we have to remember that Applied Materials is in a net debt position. It basically means that all its obligations, like bonds, loans, and other financial obligations, exceed their cash and cash equivalents, which means their cash in hand. It is not a risky position in our opinion, because they do have interest coverage ratio of above 30%, and in these days it's very important to have a good interest coverage ratio, so they would be able to cover their interest when interest rates are rising, and this is exactly what happened these days. So I don't think it means something very risky for the company, but we just have to bear it in mind. Now, their operating cash flow generally exceeds their net income. It basically means that they have more cash in hand from their core operations than what they report as a profit. But in fact, in the last 2 years, they're kind of messing up. So we need to remember it, and we need to keep tracking their operating cash flow to see if this is not a beginning of a bad trend, a decreasing trend, and so on. So overall, financially, Applied Materials looks very good. But I think it's time to see what is their position in the semiconductor industry, and more specifically in the equipment segment. If you liked the video so far, don't forget to give it a thumbs up, and if you have any questions, let us know in the comment section down below. The biggest competitors of Applied Materials is Lam Research, KLA Corporation, and ASML. Now, the semiconductor manufacturing equipment market is about to grow at a 10.4% in a compound annual growth rate, from $91 billion in 2023 to $150 billion in 2028. And I think that the reasons for this increase is the Internet of Things, 5G, and of course the AI. But I think it's best to hear it from firsthand. So let's hear what Applied Materials CEO has to say about it.
Tens of billions of devices, maybe 20 billion devices today. And there are projections that range from 500 billion to 1 trillion devices in the next decade. And again, this is really at the infrastructure of enabling technology to transform major industries. This is inevitable, and we'll have an explosion of these devices, creating an enormous amount of data that needs to be stored, processed to unlock the value and connect it. And at the foundation of all of this, at the foundation of this infrastructure, are semiconductor devices.
Overall, Applied Materials has a large position in the equipment market, but it may seem that KLA is gaining more and more market share. So I think that Applied Materials has to keep being innovative and expand its operations. As long-term investors, we believe that in the long run, the stock's price tends to follow the company's fundamentals. Now, if we assume that Applied Materials will maintain its lowest price-to-earnings ratio of 15.22, and it will experience a 10.98% annual growth rate, which is what analysts expect from it, the stock price could potentially increase by roughly 8.30% per year. So it will reach $197. At a current price of $144 a share, we think that Applied Materials is fair valued. But you won't be able to fully enjoy the growth of the company, which is 10.98% in the next 5 years. And also, we think that the risks that are associated with the company are not yet priced into the stock, and therefore there is no margin of safety. Even though Applied Materials is well positioned in the semiconductors industry, we have to remember that there were once companies that were at the top and fell hard, just like IBM. And if you're interested to know what happened to IBM and to hear the story of the company and the financials, you're really welcome to check the video we've made about it.